What is up, YouTube? Today is June 5th, 2026. I'm going to be going over today's price action, the one trade I ended up taking, making roughly $585 and some change across my two funded accounts, making roughly $290-ish across each account, adding up to $585. So let's jump into the market this morning. Going into the morning, we did have news this morning. 3 red folders got released. We had unemployment rate, non-farm employment change, and average hourly earnings. Bunch of bullshit. But that bullshit did create a data wick. So we did have a data high pre-market at 8:30. That same wick was also a 1-hour fair value gap that was unfilled. That is yet to be tapped into. So my only scenario that I was going to switch bias to target stuff to the upside was we sweep out this data high, maybe inverse that hourly, and then we could target this buy side up here in previous session highs and all that good stuff. But as you can see here, we did not do that. We just dumped from market open. I did take my trade at 10:30, 10:25. But I was going to take something at market open. We have a nice AMD setup here on the 2-minute. Accumulation, manipulation, distribution. We have our accumulation right here with this chop, and then we have our manipulation leg, creating that 2-minute, and then the inverse. We also were respecting a 4-hour bearish gap, as you can see here, also distributing through this 4-hour here with this huge Drake the Snake candle to the downside. The only reason I hesitated and didn't take that trade was because I kind of just wanted a little bit more confirmation that early into market open that we were going to go lower in price. But for those that did take it, I mean, it played out beautifully. So whoever did take that trade, they banked, kind of trade mogged me, but it is what it is. So later in the session around 10:30, let's see here, we had a 15-minute gap, which normally for me, in my experience, whenever we have a huge dump like this, I mean, this is over 250 points to the downside. If you want to catch a continuation model, personally, you can't rely on a 5-minute. You have to, minimum gap that you want to take a continuation out of has to be 15 for me. So we did get that right here, this 15-minute. Tap into it beautifully, reject out of it, as you can see with this candle close here, wick up here. The only issue with the trade was we created a 30-minute right out of the inverse that I did take, the 5-minute. This small gap right here, I'll mark it out so you can see. This small gap gets inversed, but my stop loss was a 30-minute unfilled gap. So was not A+. That was a, as you can see, high cortisol trade, just like the last video I had, very high cortisol, but it is what it is. So we did reject out of that 15-minute, and out of that we got a 5-minute inverse to the downside. I was targeting, I mean, we only had a couple draws left. We had these low resistance lows right here, or high resistance, whatever you want to call them, and a unfilled new week opening gap that I will show you right here. As you can see, mark that out, and that was my final target. We had some sell side liquidity also as well, and I had a break even right here at this swing low, and like I said, stop at the 30-minute. And if I were to get stopped out in this trade, I definitely would have entered again, because if we reject out of that 30-minute, I just knew we were going to go lower. There was no way we were going back up this late in the session. Luckily, price did end up reversing for me. And yeah, this trade took about 3 years off my life. I was in it for over an hour. But I'll wait. Patience is key, especially if you're gonna bang and make money. So that is today's trade recap. That is today's market. Happy Friday. A good week. 3-0 on the week. Up around 1.5 on both accounts on the week. So very, very, very good start to June. But that is it. If I take a trade next week, y'all will be the first to see it. And I will see y'all in the next trade recap.